Good day, guys. Welcome to Forex Walker. Welcome to episode 71. So, in this episode, we are going back to basics. When I started trading, I think, because here in South Africa, we have uh, an education funding system by the government where they fund any grade 12 student who wants to go to university or college. It is paid for by the government. They fund it. Unfortunately, for those who want to become a crew member of a ship and or a pilot to become a captain of a ship or to take charge of an aircraft, the government does not fund that, unfortunately. And any other career that you are looking to pursue, the government will not fund it. But those are most of the time the cheapest careers that you can pursue because you can study. A small course, whether it's diesel mechanics or whatever you study, and you can actually start working and start making good money. And the studies are not really a 4 year degree, they take like 12 months or 2 years. So you can really start working from there on your way to becoming a captain of a ship. Unfortunately, the government here does not fund that kind of a career. And for those who want to become air traffic controllers and pilots, you can get funded through the aviation industry, or you can join the Air Force or the Navy. But if you want to do it in without the military, you need to fund it yourself. So after grade 12, I was stuck between a rock and a hard place. I was applying for the Air Force, the Navy, and I ended up asking myself that I'm sitting here at home doing nothing for the whole year. What can I do? And since I studied math and sciences, I did not have a background uh, in uh, in how to trade. But trading at the time where I was in grade 12 was something that is talked about with high regard by the students. But they were basically talking about the expensive cars, the BMW M4s, and the cars. They were not talking about the market. So I had my interest in studying exactly what moves the markets, and I ended up seeing I think it was a podcast, and in that podcast there was a hedge fund manager, and I think it was a journalist. It was BBC or CNBC. I'm not sure what it was, and that. The person hosting the hedge fund manager asked him the question, the famous question that what moves the markets? And the hedge fund manager said it was inflation. And at that time, actually, it was the market was moved by inflation. It was in 2015, and in 2015, yes, the market was moved by inflation. However, that was the time where the things like NFPs and all of those things and Nasdaq, the stocks were coming in and complicating the whole thing. So I had an interest in this inflation that he was talking about, and that's how I ended up looking into inflation, because I did not have a background in finance. But I studied financial mathematics, and I would rather prefer to look into, what moves the markets, find the recipe that nobody knows about, and start trading. So I struggled a little bit, and until I found another lady called Karen Fu, who talked about, she's from Singapore. Karen Fu was also interviewed, and she talked about the best inflationary system that she looks into, and that inflationary system is called core inflation. So the core side of inflation, whether it's core CPI or what, it excludes the energy prices like fuel prices, food prices, anything that, even when the economy is not doing well, you still need to go to the store to buy food or buy petrol for your vehicle. So it excludes those energy prices. So I started looking because I could not trade on quarter over quarter basis. I could not wait for 3 months to take a trade. So I preferred the month over month core inflation rate. So this is the euro area, and these are some of the trades that I used to do. And I want to show you here, it says October, but the month is actually November. This is here on the apron, the black apron. It says the 15th of November 2025. Uh, so this economic report is released towards the end of the month, which could be the 20th, the 25th, and the 30th. So we're still waiting for the November release, but the November release will be traded in December. So let me show you something here. So here it says October. We know that it's talking about the previous month, and we are trading it on this month. So we had a bit higher from 0.1% to 0.3%, which is a jump by 0.2%. So let's come back this side. This is a trade that I just took profit on. So as we began, I was looking this month. I was looking for longs, and in those longs, remember, this is an old trading strategy because I did not understand macroeconomics at that time. So I used to follow inflation. When inflation gives you a bit higher, not that high, but a little bit higher, like the small one that we have is not a jump, it's just a tiny bit higher. What happens is that it tells you that the economy did well on that previous month, but so it is an expectation of bullish stance on the macroeconomic on the price action part of the market. So because we had a big higher, my mouse is not moving. I don't know. I always have issues with a mouse that is not moving. So we moved from 0.1% to 0.3% on the previous month in October. And what I did is that I started looking for longs on the Euro Japanese yen. And the reason why I'm using the Japanese yen is because they're not doing well macroeconomically. So you can either hold the long trade from here. As you can see, it says it went to the lowest point, it went to the 50% fib, and then it dropped all the way to down here, and it says on the 25th of October, the trade took off and it never came back. So what you need to do is that if you want to hold it from here, you know that because of the huge economic divergence, you will not really get all the way down here actually. So that's how I held the trade, looking at inflation giving us a tiny bit higher. However, there's something else that you need to look into, something that I had to lose money to learn. So here it says December. We know that it's not December, it's January because we're looking into the previous month. Here it says October. We know it's November. So here in December, for us to know whether to buy or sell in in January, in Feb, here it says we had a collapse from 0.5% all the way to negative 0.9%. Now, when you see a tiny drop, you know that the currency will go bearish a little bit, and you can actually take that trade for a month. But when you see a 0.5% plus negative 0.9%, this gives you a negative 1.4%. If you add the two into the negative side, it's a negative 1.4% of a collapse in inflation. So when you see a huge collapse like this, you know that the currency will react in the opposite direction. Remember, when it gives you a tiny collapse like that, you sell. But when it gives you a huge collapse, a jump, I call it a jump actually. When you see a jump like this, you know exactly. Let me show you the date. When you see a huge jump like this, it says December, January, we know this is Feb because of how I told you here with October. This is Feb. You know that when you see a collapse like that in Feb, you need to start looking for longs. Why are we looking for the opposite side of the trade when inflation is collapsing? That's because when inflation is too low, everybody else want to rush to the stores. They want to buy everything. Loans are cheaper. Uh, you know, anything that you're going to be buying in that month with the lowest inflation, everything will be cheaper. A lot of companies are going to be running to, you know, that the loans are going to be cheaper at the Reserve Bank. Uh, and when the Reserve Bank provides cheaper loans for the banks are also going to provide lower interest rate uh, loans for consumers. So everybody else will be what do I call it? Will be optimistic in taking loans, in buying groceries, and doing all of those things. So when you see a huge jump, remember that's a negative 1.4%. It's a collapse from positive 0.4% into uh, it's a collapse from my mouse is not moving. It's a collapse from positive 0.5% all the way down to negative 0.9%. So this is a huge collapse. Once you see a collapse like that, you know that these two guys are coming to take over. And what you do is that you take the opposite side because everybody else will be optimistic to buy and do all of those things. So here it says down here on the apron, here it says Feb 28, 2025, we held longs and we never looked back. The market never came back because the all businesses are doing well. Anybody else who wanted to take a loan, they took a loan. The economy is doing well. Everybody wants to go shopping, and that's how we ended up holding this huge trade. Now, it is if you want to hold a currency long term, you need to look into what the FOMCs are saying. What is the Reserve Bank saying? What are they saying? In what kind of a tone are they saying? And then you can actually hold and relax in a long term trade like this. So that one, I showed you the tiny move that I held from here. We went to the 50% flip, we came back and we took off. So this is one trade that I held not so long ago. I took profit. So thank you guys. This is back to the basics, and this is how I began my trading journey, knowing nothing about finances but mathematics and physical sciences. But I was able to survive. Thank you guys. See you on the next episode. Goodbye.